Well, hello and welcome to Summit Alliance Advantage Americo Home Mortgage Series training webinar. That's what we're going to cover today. Americo is a phenomenal company. We steer agents towards companies, that really want the business. Not only that, they're, an A-rated company. You want to have good companies in your pocket. And the product that they offer with the HMS or the Home Mortgage Series is a great product for your client. My name is Jason Martinez. We're going to go ahead and get started. And again, we're going to talk about the Home Mortgage Series, understanding the product and going over the application, running quotes on the product. And, that way you can have a good mortgage protection product in your back pocket for your clients out there in the field. So go ahead and get started, jump right into it. This here is a Home Mortgage Series. This is an agent guide or a client brochure. Basically it's a quick reference that you have. You can kind of present some of the options that are available. When you're talking to your client, what's great about the products that they have available, you can order all of the material from Americo directly from their website, and they'll ship all of that stuff right out to you at no cost. And you can have the nice glossy brochures for your clients and just have that stuff on hand. In case needed, it's a good point of reference, to illustrate the benefits of the product to your clients. So you can get all of that stuff directly from Americo, of course, once you're contracted. Now the HMS product, the Home Mortgage Series, this is it's a mortgage protection product with options. And you may have heard me say this before, but the parameters are wide open on this product as far as what it covers. You got a product that allows to gives the money back to the client. It's going to give the disability, critical illness, a lot of options, and we'll touch on that today. But the HMS has a few different versions. It has the HMS Plus 100 and the HMS Plus 100 CBO. Now CBO means cash back option, of course, which means the client gets their money back at the end of the term that they set up. Now with Americo, they have the CBO available on the 30-year term. Now we primarily focus on the HMS Plus 125. It's a very competitively priced product for mortgage protection. It offers an additional 25% accidental death benefit. That's automatically included with it. That's what the 125 indicates. The 100 is just the death benefit. The 125 includes the 25% additional accidental death benefit. And of course it has the CBO option, the cashback option available with that. And again, that's going to allow the client to get all of their money back that they paid for the coverage at the end of the term. Another neat feature that the HMS has is the income term option. This is an option that gives the client the ability to determine how much the death benefit will pay out on a monthly basis to their beneficiary. So for instance, they can elect to have their beneficiary receive $1,000 a month for 15 years or 20 years, basically ensuring that they're going to have the money to cover the monthly mortgage payment. Maybe they don't want to put a lump sum cash in their hands for whatever reason, or maybe they just feel it's more ideal to pay it out, because it does help out with the monthly premium to elect to use the income term option. Again, it's going to decrease what the client has to pay each month, making it a little bit more affordable for them, but at the same time providing the mortgage protection that's needed for the client. Basically, ultimately they want to make sure that the home's protected, whether that be paying off the mortgage in full, providing enough money to make the monthly mortgage payments in form of the income term, or maybe a smaller face amount policy. So again, they have a lot of great options with the HMS mortgage protection, and we're going to talk about some of those options. But first, just kind of the parameters of the product. It's basically a term product. Now when you add the CBO, it kind of puts it in the UL classification, but just know that at the end of the term they're going to get their money back, and it's only available on a 30-year term. They do have a minimum death benefit of $25,000 and a maximum death benefit of $400,000. Now most companies only go up to $250,000, so you have some expanded parameters there. You have the ability to go up to $400,000 with the saliva swab. Now basically they give you a kit that you can use to do this, and again, that allows you to get the client covered. No medical exam, just a quick swab of the cheek, with little Q-tip. It comes in a sanitary sealed kit that you seal back up and send into the company that does the testing for that. And again, that allows you to go over 250,000. Otherwise, you can cover up to 250,000 without anything. No medical exam, no swab, nothing, just the paper application, sending into the home office and letting them check the medical records and make an approval based on that. The issue ages, it starts at age 20, and you can cover all the way up to age 75. Now you'll note that the term limits as far as what it covers will decrease for the age. For instance, you can only get a 15-year term up to age 75. Now, the benefit to that is most companies only offer a 15-year term up to age 60 or 65. So again, you can cover someone all the way up to age 75 with a 15-year term with Americo. That's not available, hardly anywhere. So they got a great benefit there. They also offer a 30-year term up to age 60. Most companies stop their 30-year terms at age 50. So again, you have another benefit there. If you have someone that's 55 years old and they have a 30-year mortgage, well, they want to get a 30-year term. They can get that with Americo, and they can only get a 20-year term other places. So a great benefit there. Again, they have many options that can be added as far as riders like disability, critical illness. The premiums are going to be level. Of course, the income term rider, which I briefly covered, and the cashback option. Again, people like the idea of being able to get their money back. You're not going to get your money back with your homeowner's insurance or your car insurance, but you can get your money back with your mortgage protection insurance. So kind of a neat benefit there. And again, it includes the 25% additional accidental death benefit rider. They also, on their underwriting classes, what's unique about their underwriting classes, you can actually give someone a non-tobacco rating if they are a cigar user or if they chew tobacco or use a pipe. And so again, you have that neat feature there to be able to get someone a non-tobacco rating who does not smoke a cigarette. Basically classification for tobacco rating is a cigarette smoker. And then they also have low nicotine premiums. So for the people that do smoke cigarettes, they're going to have a little bit more competitive premium for smokers than other places. And again, the product, there's no exam, there's no phone interview, and it still issues very quickly. You're going to get a decision in 48 to 72 hours if you have a clean application. The application's pretty short and easy. Another great benefit to Americo in the HMS product is the fact that it pays daily. If you have business going in on a regular basis, if you have the pipeline full, what we say, then that's going to pour out deposits, and and it's neat to have that be paid daily. So great product to take advantage of. Let's talk about some of the riders that we just covered that are available, like disability. With the disability income rider that Americo offers, it does have a 90-day waiting period. It's designed to play off of short-term disability that most people have through their employer, which covers them for a 60 to 90-day period. And that's when this kicks in because it's long-term, so it pays up to 2 years. Now, another neat feature is that it pays up to $2,000 a month. Most companies only pay up to $1,200 or $1,500. You can go all the way up to $2,000 with Americo's disability option. Another benefit that they have is you can get it on a 1-year option. And so you can, which will of course decrease the premium for disability. So if you have someone that wants disability coverage, they're not worried about having necessarily a long-term, but they still want to have something in place. You can help out and minimize the premium a little bit by going to a 1-year option instead of a 2-year option on the payout for disability. They also have the critical illness accelerated benefit. This is going to give the client up to 50% of the death benefit, which would be advanced upon the diagnosis of a qualifying event like cancer, heart attack, stroke, some type of critical illness. It's a minimum of $10,000, and they can receive all the way up to $200,000. So if they did the saliva swab and got a $400,000 policy, and they have the critical illness rider attached to that, and something happens, they have a heart attack, cancer, stroke, they're going to be able to gain access to $200,000 of their death benefit, based on the critical illness that occurred. And so again, that's a great benefit that can help families out in time of need, because we all know if you experience medical challenges, your medical bills and that stuff can stack up. Not only are you dealing with that, by being in the hospital, losing time at work, you're losing income. So it's good to have access to some funds that can take care of those bills, that can take care of your family while you're, dealing with the medical challenge, trying to recover. And, so again, it's a great benefit that people can offer to help protect their mortgage in time of need. They also have the waiver of monthly specified premium. This is a rider that's going to waive the premium. Basically, after 180 days, it's going to waive the premium for 6 months, during the time that they are disabled. And what's neat about this is it will be waived for the duration of the disability. So if, worst case scenario, if the client experiences a lifetime disability, well, their policy is now paid for the life of the policy, whether it be a 15, 20, 25, 30-year term. So, it's a neat benefit to have, very inexpensive to add, and again, that's a rider that can be added to the policy, to just ensure additional coverage for the client. They also have involuntary unemployment waiver of premium. Now, this is a no charge for this, and it's automatically added when the waiver of premium is selected. So note that the involuntary unemployment waiver of premium comes with the waiver of premium for disability. So what this will do is this will waive up to 6 months of premium for the period of the insured's continuous unemployment. Now, this is state filed unemployment. The way I like to refer to this to my clients is you may lose benefits at work, but you're going to get to keep your mortgage protection benefits because we're going to pay those premiums, for 6 months, giving the client time to regain employment, get back on their feet where they can continue to make their own premiums. They also have the children's term rider available. You can get up to $15,000 per child. This is this rider provides a level term life insurance on any child, stepchild, or legally adopted child of the insured named in the application. Again, provided the child is 18 years of age or younger on the date of the application. Now, after the date of the application, the rider will include any child born to the insured or legally adopted by the insured, provided the child is 18 years of age or younger at the time of adoption or what have you. Now, what's neat about their child's term rider is the fact that it can be, the children can keep the coverage, they can convert it to permanent coverage and actually increase it up to 4 times without evidence of insurability. So that's a neat rider that they offer. So again, if the client gets their children covered with this rider later in life, if for whatever reason the child experiences a medical challenge, they have coverage that's in place that they can increase up to 4 times that they will have for a lifetime, of course, that they pay for, but at the same time, where they would then be uninsurable, now they can convert their coverage, without evidence of insurability. So that's a great rider to have, another neat feature that they offer. They also offer the income term rider. Now, this is available on the 125 cashback option only. So again, this is going to allow the client to receive a monthly income payment in the amount established when the policy was issued until the end of the monthly death benefit period. So if the client elects their beneficiary to receive the death benefit for 15 years, on a monthly rate of $1,500 a month, and that's what they can set up. So again, that's all determined, at the time. And, you can kind of design this around their monthly mortgage payment. What are you paying currently for your mortgage, including your taxes and insurance, and maybe a second mortgage or what have you. And, so that's about $1,800 a month. Okay, great. And then again, you can design it and, how long are you paying? How long is your mortgage noted for? 20 years. Okay, great. So we're going to give your beneficiary 20 years of payments of $1,800 a month of income so they can, rest assured that they're going to have that money to make that mortgage payment and stay in the home if something were to happen. So again, that rider actually decreases the premium instead of paying a lump sum to the client. So instead of paying $200,000, you can pay the client $100,000 or the beneficiary $100,000. $1,000 a month, as opposed to a $100,000 lump sum death benefit or a $200,000 lump sum death benefit. And again, that's going to decrease the premium as opposed to paying out a lump sum. This is a neat little form that they have that kind of goes over the highlights of the HMS 125, the CBO, the 100, kind of the differences between, and again, the primary difference is the fact that the HMS 125 offers an additional 25% accidental death benefit, and then they also have an option with the HMS Plus ADB. So if a client, for whatever reason, they do not qualify medically for the mortgage protection, you can cover them with an accidental death benefit policy, and it comes in set amounts of 100, 200, 300, and 400,000. So again, that's another option that they can have. Or you can cover them with maybe, their health doesn't qualify for a mortgage protection product, but they may qualify for a final expense product where you can present that as somewhat of a payments protection program where that's going to provide them a monthly, enough to make the monthly mortgage payment. For instance, if their mortgage is $1,000 a month and they receive, you set them up for a $25,000 final expense policy, that's going to provide their beneficiary basically 2 years worth of mortgage payments, 25 months worth of mortgage payments. So, it's another way to present it. It's another way to get them covered. And again, you're serving the same purpose in providing mortgage protection for the client, making sure that they get to keep the home in case of a tragedy. Underwriting for this product, again, it's simplified underwriting, which means there's no medical exam. It's a yes or no application. Basically, they're going to confirm the information that you gather on the application, check the Medical Information Bureau or the MIB. They're going to do a script check, or basically check the pharmaceutical records as far as what prescriptions they may have been prescribed in the past 7 years. And then they also, of course, go off the insured's bill. Now, they do have liberal height and weight guidelines, and again, which are found in the agent guide, which you can gain access to in the Dropbox, and eventually the back office. Also, the HMS is completed on a paper application with no phone interview. It's neat to be able to sit down, gather the information, do your due diligence, and turn that into the insurance carrier without having the client, jump through another hoop and having to talk on the phone and go through the medical questions a second time. Always practice good field underwriting. If you do not want your clients on the phone with the underwriters, if you want your clients to get approved, make sure that you're gathering thorough medical information. If you have to jog the client's memory, well, I'm healthy. I don't need to go to the doctor. I haven't been to the doctor in years. I can't remember the last time I've been to the doctor. Okay, great, Mr. Client. Well, when was the last time maybe you had an accident or the emergency room, or maybe you went for a cold or just to the clinic? Well, I eat onions and garlic. I don't go for any kind of cold. Okay, Mr. Client, when were you, where were you born? Basically, the point to that is get some kind of doctor's information. Again, most of your clients are going to have their regular practitioner. They're going to have that information available. But at the same time, if they don't remember a prescription, or, well, I was prescribed something, but I don't take it because, I'm better now. Well, you still have to indicate that medication on the application because they were prescribed the medication. You don't want the underwriter to get the application, do a script check, find a medication that's not indicated on the application, and then they're going to assume that the client is withholding information. In that case, since there's no medical exam, they have to protect the carrier, and they're more than likely going to decline that application. Another tip on underwriting with Americo, in most cases they assign one underwriter to each agent's business. So these underwriters are going to be familiar with your business that you're submitting. If you practice good field underwriting and you're submitting good applications and they're in good order and they have the detail that the underwriters need to make a decision, then you're going to get possibly the benefit of the doubt when they receive your applications. Oh man, this is Mr. Joe, good application. He sends in great business. We know that everything on here is completed in full, and they're going to go through that and be able to send it through and keep it in jet issue status. If you send in applications missing information, let's say they do background checks on MIB or prescriptions, and all that information's missing on a lot of your business, then that's an indication to them that you're not doing good field underwriting with your client. Basically, and all that is simply completing the application in full, which we'll go through here shortly. But again, make sure that you gather all the information from your clients thoroughly, so you can paint a good picture for the underwriter so they can make a decision on your business once they receive the application. Now we're going to talk about the application. This is the HMS Plus application packet. What's neat about Americo is when you order the application from them, it comes with all the paperwork that you need to go over that application. And going through it here, you'll notice this is a transmittal form, basically kind of the second page of the application. Agent name, agent phone number, email, contact information, and then your agent code, and that's the number assigned to you by Americo. So again, basic information. Now, when submitting your applications, again, with Summit Alliance Advantage, you want to make sure and submit those directly to the home office so we can basically put a second set of eyes on them, make sure that they are in good order, they will stay in jet issue status, and basically when they get to the carrier, they'll fly through. You'll get that approval in 48 to 72 hours like you're supposed to. Because again, putting a second set of eyes on those, we're going to make sure that nothing's missing, all the pages are included, and everything is in good order. So you get paid quickly. Again, we like that daily pay, so we want to take advantage of that. We do have a cover sheet that you'll include whenever you send that up as well. So make sure, and also we do that so we can track your business for promotional guidelines as well. And moving on to the next page here, this is really the first page of the application. This is where you're going to gather the client's personal information. Now, you'll notice here, maybe I can get a little highlighter here real quick. Of course, you have the client's information. Notice that it's the last name, first name, and then middle initial. A lot of times, you'll write Joe Smith, and it's supposed to be Smith, comma Joe. So, keep that in mind whenever you're writing down the client's information. Another thing, whenever you get the mailing address, some agents will forget, they'll just write the street name, but they'll forget to add the city and state because it's all on the same line. So make sure and add the city and state there whenever you write down the address. If the mailing address or if the street address is different from the mailing, make sure and include it. If not, it's the same. That's fine. Number 7 here, how long at current address. Now, if they've been there for less than 5 years, you'll need to include the previous address, of course, in the city and state. So if it's 4, 1, 2, 3, or 4, include it. If it's 5 or more, you don't have to include it. The phone number here, of course, the client's phone number, the client's email address if they have one, social security, date of birth, the client's age, the city and state that they were born, also, of course, if here if they're a U.S. citizen, if they're currently employed, and then at the same time you want to gather their employer's information. Just a quick tip: whenever you're talking about their employer's information, you can kind of open the door. How long have you been employed there at Bell South? Oh, well, a couple of years. Oh, okay, great. Well, whenever you left your last employer, did you take control of your 401k? Oh, well, I'm not sure. Okay, great. Well, that's something we can talk about maybe at a later time. So again, it's just a little door opener there when talking about the employer information. If it's indicated that they've been there for a short period of time, that's just kind of a little a tidbit of information there that you could use or ask to open up the door for maybe a possible IUL sale or a possible annuity sale or retirement protection program for them. Now, kind of moving on here to the product information, you'll notice that I have the HMS Plus 125 selected. In most cases, that's the product that they go with. If they like the money back option, then of course we're going to give them the HMS Plus 125 CBO. But in most cases, people want to make sure that their home is protected, that in case of the worst, their family gets to keep the home. So we're going to make sure and provide them a good death benefit that fits in their budget. Also here, you'll notice that I indicated 30-30. Now the difference between, let's say, 30-30 and the 35 is the fact that this is a 30-year term and the premium is guaranteed for 30 years. Where here it's a 30-year term and it's only guaranteed for 5. We always guarantee the premium the entire length of the term. So if it's a 30-year, you want 30-year guarantee, and so on, 15-15. Here are number 3, payment information, face amount. This is where you're going to indicate the amount of the death benefit, which again is more than likely going to be tailored to the mortgage amount. If they have a $140,000 mortgage, you'll more than likely set up a $140,000 death benefit. You'll include the monthly premium here. And again, they have two options. It's either going to be a monthly bank draft or they can pay for it annually. Let's see if I can, there we go. Had some additional highlights that did not need to be there. Now here on the effective date, in most cases you want to elect the issue date, and what that will do for the client is that will, once they receive and issue the policy, that will be the day that they draft it. That will be the day that they draft it on each month thereafter. Now if they have a specific date, it needs to be between the 1st and the 28th, and you would mark this box here on specific date, and of course you would indicate the date on this line here, whether that be the 15th or the 20th or whatever day that the client elected if they wanted a specific date. Under riders, this is where you're going to include the of course the additional riders that they may want to add. So if they want to add let's say the children's rider, you can elect the children's rider here. You know, if the accidental death benefit, that can be included as well if you want to give them more. Now, again, automatically they have a 25,000 or a 25% increase on the death benefit, so it's going to pay an additional 25% accidental death benefit. Here's the critical illness benefit, and you know, whatever amount that they you know, look to set it at, or whatever percentage. The waiver of premium, if they want to add that. Disability income. And again, here you can elect the 1 or the 2-year option, and you can indicate the monthly amount. Here we did $1,400. Kind of a rule of thumb, the monthly mortgage payment is about 10% of the mortgage amount. So you can see here, you know, $140,000 mortgage, you're probably paying about $1,400 a month, maybe a little less. You know, that's with taxes and insurance or what have you. And so, you know, you can indicate the amount here all the way up to $2,000. Number 7 here, monthly income death benefit. This is if you want them to receive a set amount, so whatever amount here, whether that be $1,000, $2,000 a month for the income period, whether that be 15, 20, 25, or 30 years, or to age 70. So again, you got a neat option there with the monthly income death benefit option. So again, that's going to, instead of paying the death benefit a $140,000 lump sum, it's going to pay it out over a set period of time at whatever amount that the client elects. Section 4, this is the beneficiary information. You're going to include the primary beneficiary here, the beneficiary name, the social, the relationship, date of birth, phone number, email if they have it, and the percentage they're set to receive. Now, in some cases, you may be in a situation where the client, for whatever reason, may not know, maybe the beneficiary is their sister, their aunt, or their mother, and they may not have that information on hand. As long as you indicate the relationship and the percentage, you do not have to have the social or the date of birth. It's good if you do have it, but again, it's not going to prevent you from submitting the application. So don't feel like if you're in a situation where if they only know the name, the relationship, and the percentage, that you have to hold the application before you submit it, before you get that information, before they get a hold of their beneficiary. And then also if they elect to have contingent beneficiaries, this is where you would indicate that here. The name, of course, you know, first and last, social if they know it, relationship, and the percentage if they're set to receive. So if they have 2 beneficiaries for contingent, more than likely they're going to split it 50-50. You indicate the percentage here. So, and again, same thing for the contingent beneficiary. If for some reason they do not have the social, you can still submit the application as long as you have the relationship and the percentage that they're set to receive, and of course the name. In Section 5, now again, you may have heard me say this before, we try not to replace insurance. This covers existing insurance. Now, if they do have existing insurance, you'll indicate yes, and once you indicate yes, you'll fill out this portion here, which would be the insured's name. If it's term or whole life, 100,000, 25,000, the name of the company that it's with, and then if you know, they took an exam for it, and then the month and the year that they got it. Now they may not have all of this information, so if, at least you can get the name of the client, of course, maybe the face amount. Sometimes they don't even remember that if they don't have the policy on hand. Hopefully they remember the company. Sometimes they may not remember that, but at least you can gather as much information about it as possible. Now in most cases you want to indicate no, that you're not replacing, unless it's in the client's best interest. That's the only time you want to replace their policy. Let's say they have a mortgage protection policy that's only guaranteed for 5 years, and you come in and you can guarantee it for the entire term, or something to that effect that's going to be a benefit to the client, then you can replace the policy. Other than that, now if they have coverage through their employer, that's not included as additional life insurance. You don't have to worry about including that on the application. You can just simply mark no, that they do not have other insurance. Reason being is because they're not in control of that insurance. Their employer, human resources, could change their benefits program. They could eliminate coverage totally. They could lay people off. They could decide to leave their job. Basically, they're not in control of that coverage like they would be something like a personal mortgage protection policy through Americo. So again, if you're going to replace that, make sure you have a good reason. Indicate the information here, yes, and make sure you complete the replacement form. But again, in most cases, we're not replacing. This is just additional coverage. If they do have life insurance, that's probably designed, that's probably already there to replace the loss of income. This is designed to replace to provide the funds to pay off the mortgage in case of a tragedy. So they have their replacement of income, and they get to keep their home. So they don't have to take their life insurance and use it to pay off their mortgage. So it serves a different purpose. So keep that in mind. We're not replacing. Oh, let me go back to that page. And again, down bottom where it has owner information, if different from proposed insured, in most cases, the proposed insured will be the owner of the policy as well. Number 7, Section 7, medical history. This, again, is where you're going to gather the medical information. You want to be as thorough as possible. If they're a smoker or not, this is basically the first question, or what type of nicotine products do they use. Again, if you indicate here, you can give them a non-tobacco rating, and they do include electronic cigarettes. That was asked before. So, or no nicotine products at all. So non-smoker. Either way, indicate if they're a cigarette smoker or a non-smoker, or if they again use other nicotine products, cigars, pipes, chewing tobacco. Now, again, if you're a current nicotine user, have you used any nicotine products in the past? You'll indicate yes or no, and then indicate date of last use. Now, what's neat about their medical questions here, you'll notice they have this box around the first section of questions 2 through 3J. If you have a yes answer here, they're not eligible for the home mortgage protection product, but that's not to say that they may not be eligible for the Ultra Protector, which again, as mentioned earlier, can be used as a payments protection program, again, which is still going to provide them a death benefit, provide the beneficiary a death benefit which they can use to make the monthly mortgage payments, $1,000, $1,500 at a time, or whatever the case may be. So again, they may not qualify for this, but you can still get them covered with the product that's going to serve the same purpose and provide mortgage protection and make sure that they get to keep the home in case of a tragedy. But again, based on these questions, if you get all no's, you simply move on, and then you go on to where you gather the doctor information. Now again, you want to be thorough here. When's the last time you've been to a doctor? I don't have a doctor. Where were you born? Get some kind of doctor's information for the insurance carrier to refer back to. Now you'll notice number 5, they're going to ask you about diabetes, yes or no. Now let's say you get a yes answer. You're going to want to make sure and answer all of these questions thoroughly. Basically what they're doing here, a lot of carriers have what are called supplemental forms, which if someone has diabetes, high blood pressure, you would then have to bring that form with you and fill out that form accordingly, because that's going to gather more specific information for the underwriter to make a decision about that specific condition. So again, you're going to get all of the specific details that you need for the underwriter to make a decision with these additional questions. So you want to make sure and provide details to all yes answers. So if they say yes to the high blood pressure question, you want to make sure and fill out all the information here. And again, be thorough about that. And again, what's neat about Americo's application, they have all of these conditions broken down. Now, if you get a yes answer here, that's not to say that they do not qualify. That's just they want to make sure that you get all of the information that they need to make a decision based on that condition. So you have all your conditions: anxiety, depression, asthma, other conditions, high blood pressure, diabetes, other testing, sleep apnea. So again, they kind of break down these other medical questions. So make sure when you're going through these questions, you're thorough if you get a yes answer with your client. In most cases, dealing with the market that we deal with, you'll have very limited yes answers. But if you do, make sure that you're thorough in gathering that information. Section 9, this is where you're going to get their personal information. If they've been decline rated for other health insurance, are you currently within the last 12 months using a walker, wheelchair, things to that effect. Now, one thing that's on this page that I wanted to indicate is make sure you get their driver's license number. Since this is not on the first page where you gather the client's personal information, sometimes agents will overlook or miss this. Just make sure that you get this on this page. Now, if you have any yes answers, you can provide additional details here to any yes answers that you have above. So again, just make sure and be thorough. You have room to be thorough. You have room to give detail to any yes answers. This is the authorization and acknowledgement form. Basically, this is acknowledging, that Americo is going to check records and process the application and do what they need to do to process the application and make a decision to approve it. You're going to have the client, city and state, the date, of course, the client's signature here, and you're going to sign as the agent. You're going to print your name and then sign it over here. So, again, just make sure and get that signed accordingly. Pretty simple there. This is the disclosure for the accelerated or accidental death benefit. Again, this is automatically included, so city and state, date, and then client signature. Pretty basic here. Make sure and get this signed. Again, this is because it automatically includes the additional 25% accidental. You want to make sure and get this signed. This is just a health and disclosure notification, again, notifying them that we're going to pull their medical records. You'll simply have the client sign, print their name, sign it, and then date it. Now you'll notice down bottom, signature of a child. If you've added the child's rider, if the child's old enough to sign it, I believe it's noted they have to be 15 or older to sign it. If not, the parent can sign for the child. So again, you want to make sure and have this form signed here if they add the children's rider, but in most cases it's going to be the client signing on the top line there. The agent's report, this is pretty basic. The client's name here. If you're related to the client, in most cases, you're not going to be related, but if you are, you'll want to provide the relationship here. How long have you known the proposed insured? Again, if you're related, how long you've known them. If not, more than likely it's only been 1 day. Provide details to yes answers below. Again, unless it's these questions here, this is just verifying that you witnessed their signature, that they responded you directly to the medical questions, and that you verified their identification. And these questions here, again, they're asking about the existing insurance, and again, we're not replacing insurance in most cases unless it's in their best interest. These questions here indicate no, but these are primarily for California and Florida. So pretty simple here on the agent report. This is the conditional receipt. Basically, what you're going to do, this indicates that once the policy is approved and the premium is drafted, coverage would begin. So you'll simply city and state, you'll date it, you'll sign it, you'll have the client sign it, and then you'll tear this part off and leave it with the client and do the same thing. And again, that's just indicating once the policy has been approved and premium is drafted, coverage is in effect. This is another consumer notice that they have that you can leave with the client. This is the bank draft authorization form. In most cases, you're going to elect upon issue and on the policy's regular due date thereafter. So basically, again, when they receive the policy, they'll draft it once it's issued, and that'll be the draft date. So if they approve and issue the policy and draft it on the 5th, that's the draft date thereafter. If the client wants a specific start date, say they want their policy drafted on the 15th of every month, you can indicate here, you can indicate the 15th of that month, and that's when the policy will start, and that way it'll be on the 15th of every month thereafter. Make sure and include checking account, attach a voided check. Now, some cases people do not have voided checks, carry checks anymore. If they do not, you'll want to make sure and fill out this portion down below. If they do have a voided check, you'll just want to simply tape the voided check to the bottom of this page before you fax in or submit the application. If not, you want to indicate the routing number and account number here, and you'll want to certify by signing here that you verified that that is their account. Bank statement, debit card, whatever the case may be, you can verify that that's their account. The client's signature, you want to make sure and have the client sign here. Some agents will forget that because it's kind of in the middle of the page. It can easily be overlooked, so just kind of be mindful of that. And that's basically the application for the HMS product. Pretty simple there. So now we're going to talk about running quotes for the HMS product. In running quotes, you'll notice here, I accidentally kind of went over it a little quick there, but you have quote.americo.com. You can quote most of Americo's or all of Americo's products here, but today we're going to be looking at the HMS 125, which is the most commonly used mortgage protection product with Americo. So let's go ahead and go back. Close that extra tab. You see here, you'll select the state. Today here in Texas, we'll select Texas, HMS plus 125, and then simply hit create. Now let's say we're looking at a client that's 40 years of age, male, non-tobacco, and again, note that if they smoke anything other than cigarettes, you can still get them qualified for a non-tobacco rating. The premium amount, $25,000. Let's say this person has a $140,000 mortgage. That's what our application was on. We're going to look at a monthly pack. And we want to see these options here. We want to see what it's going to look like for a 30-year GTD. Now, remember on the application, it had 35 or 30/5. That's indicating 30-year term, 5-year guaranteed. We always want to select 30-year GTD because we want to make sure and guarantee their premium the entire time. Once we hit run with our options selected, it's going to give us the premium amount for each option. So if he's on a 30-year term, he has that $140,000 mortgage for 30 years. It'll simply cost him $74.90 a month to cover that for the entire time, guaranteed. Let's say, well, I plan on paying this off early. I'm only going to have this mortgage for 20 years. Well, okay, great. Then let's only cover it for the 20-year term here, and for $56.41 a month, we're going to be able to guarantee that premium. So, again, a great option there. Now let's say they want their money back. You can simply indicate cashback option. Now you'll notice it eliminated all the other term options because it's only available on the 30-year term. Well, let's take a look and see how much that would increase the premium. I think we were a little over $70 a month. So again, for about an additional $20 a month, they're going to be able to get their money back at the end of the term. So not a bad deal. It's kind of like a savings account with protection. You're going to, in case of the worst, your family's going to get a check for $140,000. If you outlive the policy, you're going to get a check for the total amount of premiums that were paid over that time, 26, whatever amount that adds up to. So again, this is running quotes on the HMS product, pretty flexible. Again, you simply change the age, male or female, enter the amount of the mortgage. Again, we tailor this primarily to their mortgage, and then elect the term that you're looking to cover. Hopefully you got the gist of that there. And with that, again, you go to quote.americo.com and you can quote that product in pretty much 3 easy steps. Select the state, the amount, the age, and then hit run, and you're going to get the multiple term options there. So easy to quote their product, easy to sit down with your client. You can do that from your smartphone. You can do that from your tablet. Of course, you can do that from your home computer. So very easy there to run quotes for Americo. I want to thank you for attending today's webinar. If you have any questions at all, please email me at jmartinez@summitalliancefinalexpense.com. or of course give us a call up at the office. We'll make sure and get those questions answered for you. All the information that we covered today can be obtained by downloading the agent guide, the client brochure, the HMS client application, all of this for Texas by going to the Dropbox that we have set up for Americo and the Americo HMS mortgage protection product. So again, I want to thank you for attending. Everyone have a great day.